Have you been tricked too? From past experience, tech stocks like NVIDIA were often seen as crypto's blood brothers, rising and falling together. But check out this year. NVIDIA is up nearly 50% year to date, while Bitcoin is only up 17% in the same period. Even on October 28th, when NVIDIA skyrocketed, Bitcoin actually dropped. What happened to the brothers? How come one is now feasting on meat while his crypto bro is not even getting the soup? If you are still hung up on this, you've fallen right into Wall Street's narrative trap. They are doing it on purpose to make you think that way. So today, I'm sharing an insider secret that regular folks never get to hear. This isn't market choice. It's a carefully designed, capital closed loop. Picture this. You and your brother decide to start doing business together. You open a coffee shop, he starts a coffee bean company. You buy beans from him, he uses his profits to advertise at your shop. Both sides look great. Numbers popping, profits climbing. Investors see it and go, wow, these projects are killing it. And they pour in cash. You use the funding to open more locations. He expands production. You hype each other, drive up prices together. And on paper, you are both printing money. But if you follow the money trade backwards, you'll spot something super weird. This isn't gold rush. It's just, your left hand warming the right hand. This, my friends, is the magic behind AI giants taking off and the real reason crypto's getting left in the dust. For now. Flashback to spring 2025. Oracle, the old school database king, suddenly drops a 40 billion AI chip order on NVIDIA. That number blew up Silicon Valley and Wall Street instantly. Oracle's got maybe 10 billion in usable cash. This deal is 4 times their reserves. No company, no matter how bullish on AI, goes that crazy. Talk about playing with fire. But the market didn't ask questions. NVIDIA's stock blasted off, adding 232 billion in market cap in just days. Wall Street was cheering like mad. Nobody asked, where is Oracle getting the money? The answer came a month later. OpenAI announces it will buy 300 billion in cloud computing from Oracle over the next few years. In other words, OpenAI is filling Oracle's hole with typical cloud margins. Oracle pockets about 105 billion in profits. Their stock jumped 30 to 40% in one day. Market cap rocketing toward 900 billion. NVIDIA gets the order. Oracle gets a profit. OpenAI gets the compute. Everybody wins. Markets went wild. Perfect, right? But where is OpenAI getting that kind of cash? 2025 revenue forecast is just 13 billion. They are still burning money. They can't sustain on their own. The answer is Microsoft. Microsoft is OpenAI's biggest shareholder, nearly 30% stake. They pumped in 14 billions over the years. All OpenAI training run on Azure. And that is expected to bring Microsoft 10 billion in cloud revenue in 2025 alone. Translation? Microsoft is already made back that 14 billion through cloud fees. How clever is this capital logic? I fund you, you use my cloud, the more you burn, the more you use, the more I earn. Then I take those earnings and fund you again. Loop closed. Got it? Once Wall Street caught on, Oracle jumped in too. They invest in OpenAI while locking in billions in future cloud deals. Then NVIDIA, AMD joins the party. Money just spins internally between a few big players. It's always a closed loop. On the surface, everyone is doing business. In reality, the whole system runs on funding and confidence, feeding itself like a capital perpetual, motion machine. This playbook, even us crypto folks gotta learn from them. Isn't this just DeFi Lego, but the institutional, compliant version? Think about DeFi and leverage pools in crypto. Same logic. Credits and expectations amplify themselves as long as trust holds. The system runs. AI's capital loop? Exact same principle. On the bottom layer, you have OpenAI that uses funding to paint the AGI dream. It gets compute. It pumps valuation. Then on the middle layer, you have Microsoft, Oracle, booking decades of future revenue today. Stock rises. And then they raise more funds. And on the top layer, you have NVIDIA. Their products are real, right? Real, but who is buying? The same loop browser that we have done below. So the bottom line is the system runs on trust me pro expectations. We've got to see the game's true nature here. Short term, it's a tech revolution, but on the long term, it's just another financial narrative. Capital hypnotizing itself, fermenting the market. Money loops driving stocks, but this boom isn't forever. And what about crypto connection? In the big picture, they are friends. AI's autonomous economy, AI agents. They will need 24/7 autonomous finance, so crypto for settlement. They are just in different narrative phases for the moment. Right now, AI is busy printing money in its own casino. They don't have time to play with us crypto bros. But since it's a trust-based financial narrative game, it carries, of course, bubble burst risk. It's a bubble. Yes, it is. So we have to look for two signs where it could go like game over and turn very bad. First, when funding slows down. When AI companies can't sweet talk the next sugar daddy round, spending shrinks. Cheap orders will be slowing down, and just like that, NVIDIA's growth will hit a wall. Semi analysis warned in September, AI capex is overheated. If funding chains slow, NVIDIA shipments could halve in 1 quarter only. It sounds extreme, but during the dot-com era, tech stocks collapsed overnight, and it could happen again. Second is when confidence gets slapped by reality. Models commercialize too slow. AI products monetize weakly. The pie is run too big to eat. Once the market wakes up, the whole capital loop could turn into a domino crash. Funds dry up, orders disappear, valuations tank, gone in a flash. You won't see profits fade slowly. You'll see valuations implode. Because when all profits ride on expectations, confidence is the only glue. Break it and, feathers everywhere. The bottom line here is this AI wave, short-term tech surge, long-term financial narrative. It will end like any financial narrative ends. With 2 words, cash out. Real prosperity isn't built on confidence illusions. It's on products and actual cash flow. You gotta earn real money, not just be brothers warming each other's, funding each other's. Until then, what we are seeing is capital self-hypnosis, Once the phase driving the loop collapses, stock crash, loop stops, and the so-called AI boom, poof, it will be gone. So back to the original question. Why did NVIDIA and Bitcoin decouple in 2025? That's our big picture view here. Prices swing on many factors. 2025 markets don't play fair. They play narrative. AI's whole capital loop, this story, is just too damn sexy for the financial world. It sucked up all of Wall Street's attention. The capital, the headlines, even the soul. And for crypto, as for crypto right now, we are in what I'd call a narrative intermission. Just waiting for the next spark. But understanding how AI's capital loop works, that's how you learn about timing. Let them party alone. But when the capital rave tide goes out, AI giants get tired of playing left hand to right hand. I found you, you found me, and they start building real foundations with killer products and services. They will realize their massive AI empire can't run on old school banking T+1 systems. AI's autonomous economy needs a 24/7 automated, frictionless, autonomous finance environment. And that environment, that's us, blockchain and crypto. So chill. Just wait. AI is building the engine right now. We are paving the highway. Once their engine is ready, it will need our highway to run. So what we do now? Just understand their game, then wait for the wind to shift. Our time will come.